Test, test, test. Test, test, test. Hey, everybody! How you doing? Today is Wednesday, special Wednesday, where we go over self-storage investing. It says this is the self-storage investing live stream. My name is Powell Chi, and we're about to go ahead and get started today. Okay, so just to get started, self-storage right now is super popular, and it's becoming more and more popular as things are tightening up in certain other asset classes. Some asset classes that just have hardly any interest right now. So all that interest in something like office is now pushed to other asset classes. And so multifamily is very, very popular, very hot. So a lot of the competition has moved into things like self-storage. So, and it is more popular now today, probably than it ever really has been. And what I'm going to be doing today is I'm going to be spending some time answering your questions about self-storage. Okay, so my name is Powell Chi. I'm from Radiant Storage. Over the past 2.5 years, we've acquired 16 properties, 16 different locations across the United States. I live in Southern California, but all of my properties are in different states. So I don't have anything in California. They're in places like Texas, Louisiana, Mississippi, Alabama. We do also have one in Connecticut as well. And so at this point, we have 650,000 square feet. We have about 5,000 units, a little over 5,000 units. And, I'm happy to, do this and host this Q&A for people who are getting started in self-storage. If you do have, if you want to reach out to me individually, here's my info you can see on the screen. So probably the best way is to reach out to me on Instagram. So if you go to Instagram, just at powell.chi is my contact info. If you DM me the word Radiant, so you just put the word Radiant in the DM, it'll go to it'll bring you to like our latest investment, which you can see. I mean, you have to be an accredited investor to actually invest in it. But you can, if you want to just take a look at it, what our latest investment is, it's there. And also, if you are interested in just finding out more and you want to have a call, well, it'll send you a link to where you can schedule a call with me as well. Okay. And if you don't have Instagram, or if you just rather reach out on email, just send a message to invest@radiantstorage.com. All right. So that's my info. Love for you to like and subscribe. Those of you who are here, appreciate you being here. And I guess the two things before we really get rolling here is that if you could post your questions into the chat. I think there's a little at the bottom of the description, it says /group-comments. And if you click that or do something with that, I'll be able to see who you are, right? And so I can identify you, kind of bring your question on live on the screen, answer your questions, and happy to interact. Okay. All right. So let's get to your burning questions. All right. Let me just get this out right away. And okay. So here is one of the first questions that I've had. Let me clear the screen. Okay. One of the first questions I had was on tools. What are the tools that you use as a self-storage investor? Okay. Now, the number one tool is your management software. Okay. Now, there are a number of different property management or self-storage management softwares out there. These are all subscription based, and there's ones that are meant for smaller investors. There's ones that are meant for larger investors who are have multiple properties and are scaling up and growing. So there's kind of like you can search for different ones. And I guess if you have a hard time finding any particular one, just reach out to me. I'm happy to, send you a message of like which ones that either I use or, like I don't work for those companies, so I don't really want to put their names out here. So if you are interested, I'm happy to just kind of tell you, like, just send me a message. And there's several out there, but what they help you do is they help you manage the day-to-day operations of your facility. So they might include a place you can create a site map, so you can say where the buildings are and which units are on the buildings and which units are rented. So they'll have different colors. They're going to have contact information for all the people who are renting. So if you need to contact them or just ask them for a review, all kinds of different things. That houses all that information, as well as uh, how they can pay. They can usually pay through this through the management portal or some type of through your software. Now, ideally, you want your software to hook up with your website. Okay, so it's on its own. It's not a website. It is software. So you want somewhere where your tenants can reach out to you, sort of on the web. Okay. But that is the number one thing. So is to find the right management software, probably find a website that will integrate with it, or maybe sometimes your software might even have some type of website builder that you can use inside that tool. So, okay, that is the number one tool. All right, great. Also, hey, those of you here, ask questions. Remember, post those questions in the group in the chat. Happy to answer those questions as we go along here. Okay. Here's another question I got earlier this week was, what's the best unit size? Okay, so this is a great question because self-storage, unlike multifamily, I mean, multifamily, generally you have like three main sizes, right? You have maybe you have a studio, but you have one bedroom, you have a two bedroom, you have three bedroom. Roughly, they're usually around the same size. Maybe you can charge a little bit different if there's a little bit slightly different size. But in generally, the builders tried to build them around the same size. So you're probably going to charge the same rent. However, in storage, I mean, you could have a 5x5, you have 5x7, you can have stuff that's even smaller than 5x5. You can have 5x10, you can have 7x10, 8x10, 12x10s. You can have all these different sizes. And you don't have just a uniform number for them. You don't just say, okay, well, all of my units that are this size are $100 a month. And then, well, what happens with the ones that are, not that size? Because there's so many different ones. So when it comes to the rent is usually dollar per square foot is generally a lot higher on the smaller units. So if you can imagine, your 5x5 might rent for $50. Let's say 5x5 rents for $50. That's $2 a square foot. Okay, and your 20x20, which is 400 square feet, I mean, that might rent for like $200 a month, right? And so that's like 50 cents a square foot. So would you say, like, well, why would I have all these giant, 20x20s versus having a bunch of 5x5s? I'm just going to fill my place with 5x5s. You just don't want that. You're not. It's a different type of renter that rents a 5x5, then rents a large a storage facility, a storage unit, and you want to give your people options, right? You don't want to just give them one option, unless that's all that's in your area is like a need for one specific option. But you want to give people the option for the different unit sizes, and then you can potentially upsell, or they can move from a smaller size to a larger size as time goes on. Okay, so there isn't any best unit size, right? It's best to just have a mix. Now, if you're developing, it sounds like this person was maybe a little more interested in developing. Okay, meaning I'm building from the ground up, or I'm converting a empty shell into a self storage facility, and I want to know what's the best unit mix or unit size to have. Really, what you need to have done is a feasibility study done, which is It's hiring a third party, these experts, third party experts who will go out there into your market and specifically for your market, specifically for your location, tell you what is the best unit mix to have. So they might say, hey, out of 200 units, you need 20 5x5s, you need 40 5x10s, and you need 100 10x10s, and you need 20 of 10x15s and 20 or whatever 10x20s, and the rest you just fill out. But you don't want to just guess. You don't want to just go, well, and I would like to get more rent, and I'd like to get higher dollar per square foot, so I'm going to have 150 5x5s, and then I'll just put in a couple 10x10s, and that should be fine, right? You don't want to just guess at those kind of things, especially if you're taking any investor's money and doing this with a group of people, which is what we do. Okay. All right. So that's a question there. Okay. Let's get to, let's see, my next question is here. Oh, okay. Hey, and let's see, got this question. Where do you buy self-storage roll-up doors? Okay. So let me talk about doors just really quickly. So it's becoming sort of industry standard now to have roll-up doors. And these roll-up doors are, I guess just what they say, right? They roll up into like above your entryway into like a basically like a roll, like a little cake roll. And so that's generally what they are nowadays. They're metal, and they're just these little sections that you can wind up. Older properties will sometimes you'll have swing doors, right? Just like a normal bedroom door, like a swing door. Obviously, it's a heavier duty door, right? It's more of an industrial type of door, but it's a swing door, so it swings back and forth. And some people like those because you don't have to bend down and pull the thing up and reach down and pull down. So it's just a swing door. And so on older properties, a lot of times you'll find swing doors, and that's fairly common. It's not any better or worse. I've seen other ones that are like garage door ones. So they are like on rails, and as you pull them up, they come like on a garage door, like through the rails, all the way to the back, right? So it's kind of like just little planks that they're little sections. That's generally a little older, right? A little bit older. They're very thin metal, or maybe even some type of hard plastic. But in terms of where you can buy, so you can buy from a lot of different places. Again, I don't work for any of those companies, so it's kind of hard for me to just endorse anyone here publicly, but just reach out to me privately. I'll give you some of the names of like some of the big players in the industry, as well as some of the other options for if you're looking at buying doors. And, I would tell you in general, they're going to be over $800 probably per door, depending on what size. So, so it's not something where you go, hey, I'm going to buy this facility and I'm just going to go and replace all the doors. That's going to be a lot of doors. You might have, our last property that we're bought is 350 doors. So you're going to 350 times $800 to $1,000 is a lot of money to outlay just for brand new doors. Okay. Great. That's a question on doors. And hey, I got a question here from Facebook user. Okay. That's wicked. Okay. Well, awesome. First met you at Rod's Boot Camp 2018. Oh, that's a while ago, Chicago. Okay. Appreciate that. Thank you. Hey, Facebook user. Not exactly sure who that is, but thanks for joining. Glad you did. 2018 almost feels like so long ago, right? Pre-pandemic. A lot of things were very different back then. And but thank you for joining. And definitely let me know if you have a question, because back then I was doing a lot of multifamily. I've since been doing a good amount of self-storage, and now I've got a combination of both of those in my portfolio. So, but thanks for joining. All right, I got a question from Dave. Dave, great to see you here, buddy. Let me see. What are your thoughts on advertising self-storage on social media, pay-per-click versus organic? Great question. Okay, so we're talking right now about advertising for like you have empty space and you're bringing in renters, right? Okay. So in the world of self-storage, digital marketing is very, very, very important. Okay. Previous, you're talking like, I don't know, 20 years ago, it was probably all done in the phone book or something, right? So, people did the phone book and people just drive by. So driving by is still very important. So you do want to have proper signage. You want to do have, attract attention, like flags and stuff like that. But digital marketing has certainly taken over the phone book. And so you need to be where people are searching. Okay. So if somebody is online and they're searching for self-storage, where are they searching at? I'm going to tell you right now, you all know the answer. It's Google. Okay. So they're searching on Google. Um, and so that's the big gorilla in the room is Google. And in order to, you need to have your website, you need to be SEO, you need to have the search engine optimization. So it needs to be optimized so that your website is showing up as high as possible in your market. Um, and then you probably, besides that, which is just organic, you obviously you need to spend money on that stuff. I talked about it last week. For those of you who missed it last week, but watch last week's call. Basically, SEO is super important, and it costs money, and it sometimes doesn't really show its effect for maybe 6 months. So you're going to go through months of like, hey, I'm not really climbing up the ranks here, because it takes a while for whoever's doing your SEO to actually get some momentum, right? And that's organic ranking. The next thing is paid advertising. So now I want to pay to be on top, or I want to pay to be show up a lot higher than where my actual website is, right? So this is called pay per click. So PPC, pay per click. And with Google, this is how Google makes a ton of money, right? Is pay per click. So the cost on paying for advertising on Google can be expensive, and it requires a certain set of skills to have to be very good at it, right? It's not something that you just randomly throw up your ad and then hope that it does well, right? There's a lot of analytics involved. There's a lot of research and keywords and a lot of different things that goes on. So if you're not an expert in pay-per-click advertising, I would suggest you hire somebody to do that, or have somebody else do that. Okay. Um, but that's very important because you don't want to just pay for these ads, and if people are clicking on them, they're thinking it's like, some other kind, like they're thinking it's a storage for your computer, and they're trying to buy storage for their computer, and they're clicking on your self-storage facility, and they're like, they keep clicking. Well, every time they click, you have to pay money for that, right? And so you just wasted a bunch of money. So pay per click, super important, especially if your rankings are low, and it's something that you can turn on and turn off. So you don't always have to have it. Some of our facilities that are very full, we don't really need pay per click advertising, right? You still probably do the SEO, but the pay per click is probably not needed as much. Let's see, Dave, you did talk specifically about social media. Okay, so social media. People in general right now, we're trying to find out like what is the next avenue besides Google. Okay, so there are some thoughts that Nextdoor might be an option. So people are using Nextdoor, and so that might be an option to advertise on Nextdoor. Um, and some people like maybe Yelp. Some people say maybe Facebook. And so these are other places that people maybe are searching, or maybe you can give some brand recognition in these areas, or maybe pull some renters. But I will tell you, it's very small. All of them put together still don't even beat Google. So you really need to get better at Google. Okay. Don't spend all your time on Facebook, because people who are looking at Facebook aren't really specifically looking for self storage, or even thinking about self storage. So hope that answered your question, Dave. Concentrate on Google. Get good at Google. SEO, yes, very important. Social media portion after that is kind of like icing on the cake. I've already exhausted my pay-per-click budget and my organic SEO budget. Maybe I can throw some money at some Facebook ads or Nextdoor or Yelp or something like that. Okay. Great question. If you got a follow up, just let me know, Dave. Appreciate you being here. Okay, Mr. PK Kim, thank you for joining here. Let's see, what is your question? What is the best thing you can do to appreciate the value of the storage unit you invested in? Okay, so you're asking about appreciation, right? So self-storage is very much like other commercial real estate, where you can force the appreciation. So you can increase the value of your property by making your net operating income grow. Okay, so net operating income, all right, it's you take your total income, you minus your total expenses besides your debt. So you do not include your debt, and that's your net operating income. And so whatever you can do to grow that, which is basically bringing in more income, or whatever you can do to reduce your expenses, is going to increase your NOI, which is going to increase the value of your property. So that's what you're asking about. It's very similar in other real estate asset classes, commercial real estate. So what are these some of these avenues? Okay, I'll give you one of the very first things that we do is tenant insurance. So tenant insurance is required at our facility. So everybody who comes in has to have some form of tenant insurance. They can have ours, which they pay. Let's just say they pay $10 for. Um, we get a commission on that. So we get a portion of that $10 every single month from every single person that signs up with us. All right, as the ownership group. So, and then the tenant, is protected. Now, the tenant doesn't have to use ours. They have their own tenant insurance. They can prove that, then that's fine. That's not a problem. But that is a way to drive additional revenue. Okay, so besides just the rent, tenant insurance is another revenue stream that's coming in every month. Another one is, say, like truck rental. So, it might be U-Haul or Penske or any of these truck rentals, right? So if you offer truck rentals, your facility may get a commission on every truck that's picked up or dropped off or whatever. Anybody that's renting your facility might get a commission on it and for housing those trucks there. Okay, so that's another way to do it. Other ways that other people do it, we don't necessarily do it, but other people may sell like boxes or sell tape, sell like blankets to wrap your stuff in. That can be another way to drive revenue. I guess another big way is to have climate control, offer climate control. So some of your units, if you have air conditioning and you can set up some climate control units, you can charge more for them as well. Okay. And so those are some things. I mean, there's literally like a list of like 30, 40 different things that you can do. You can cell towers on there. We have a cell tower. We have 2 cell towers in our portfolio. Billboards. You can have billboards. We have billboards at our facility. So there's, people are paying for that space to rent the billboard. There's small little lockers that you can provide that's just like small lockers that are a little more private that, house maybe a little bit more expensive items, but, it's a locker. These lockers don't take up much space. So if anybody just pays $20 and you just have a bunch of these $20 lockers, you can, that's an easy way to drive up revenue. There's, like wine storage. So if you have like a climate control, humidity control, temperature control, things like that, and you can offer wine storage in your facility. So there's a ton of other different ways to, to what you can do. Some people offer mailboxes. So there's like, like PO boxes. So they rent them out to businesses, these little PO boxes, and you can get your mail sent there. That can be another way to drive revenue. So many different ways to drive revenue. You treat this like a business, right? And what other ways can you think of other businesses that are making money that you think that your operations can handle? We don't do all of them. Okay, I'm not going to tell you we don't do all of them. We do a limited amount of them, just with what fits within our system. Okay, and so you have to choose what you think is best for your operations. Okay. Oh, okay. Hey, this is Israel. Israel, by the way. Hey, Israel. Okay, I didn't notice the PK part of it. It makes sense now. Okay. Great to see you here, buddy. All right. What are Dave? You got another question here. What are some self-storage organizations or conventions investors should consider attend? Okay, this is a great question. Okay, basically, those of you who want to learn more, I assume you're probably here because you want to learn more. You're not just here to hang out with me the whole time. You want to learn more in self-storage, which may be a little different than multifamily. Multifamily, at least my experience in multifamily, there isn't a ton of like larger conventions. I mean, there probably are. I just don't. I just really attend them. That wasn't really where I found many investors. You probably find a lot of brokers there, maybe property managers, but I just didn't really find that I would go to like conventions, associations. But in self-storage, it's industry, like the associations and the conventions are a very important piece of the education and and education for self-storage owners, operators, investors. So if you look up the National Self Storage Association, I think that's one. It's a big one. Inside Self Storage. So Inside Self Storage, that's another one. That's education, and they have a convention that's in annually. They have conventions. So both of those groups have multiple conventions, but they have one big one throughout the year. If you go to them, let me know. I usually am there. They're usually like in Las Vegas. So since I live in Southern California, it's easy for me to get to Las Vegas. Sometimes they're across they have on the East Coast, and I don't really get to all those ones. But yeah, those are two. I would also tell you that depending on where you're operating, you would likely want to join your state's association. So you're going to have like California Self Storage Association, Missouri Self Storage Association, Texas, Arizona, Florida. All of these states have an association that kind of are all partnered together, and then on a national scale, they have lobbyists that are seeking the best what's for self storage. So joining your state's association will help you with specific laws. It also, so if you're like, you have a question about your lease, or is this a good lease, or, things like that, they can be, those can be great resources for questions like that. Probably also have a little bit more local vendors that you can reach out to. So, state association for Arizona is probably going to have, like vendors that are in Phoenix and Tucson and Flagstaff, right? And so they don't really need vendors from Connecticut in there, right? So that's something that you could do. You can find those vendors for those roll-up doors and software, all kinds of builders, architects, all kinds of different things at those associations. So great. So great question there, Dave. Thank you for asking. Appreciate it. And let's move on here. I got a question here from Greg. Greg Butcher, thank you for joining. Okay, question here. How do loans? I'm sorry. The reason why I can't read this, sometimes I have this little icon right in front. I can't read. It's like right over the text. How do loans for self-storage differ from multifamily? Do agencies finance them, or what type of lenders? What are the terms like compared to multifamily? Okay, great question. This is one of the very important questions. Probably could take up a ton of time on this specific question, which is really on lending. Okay. Now, I will tell you it sounds like, Greg, that you are from the multifamily background, and you have probably a solid grip on what's the multifamily lending is like, and you want to know what's the differences with self-storage. Now, I will tell you, when I probably came into this in a similar circumstance, that I knew multifamily background. I knew what agencies were. I knew what the requirements to get on agency debt, had already signed on some of those loans. Thought it would be really easy. Thought it would be like, oh, this is the easy part. I already know the financing things. It was not. It was actually probably the most difficult process, was to go through the lending side of self-storage. Okay. And I will tell you, it's because multifamily is very streamlined in that everything is trying to push you to like the agency debt. So when you're over $1 million in loan amount, you're looking at trying to get into the agency debt, right? Somehow, whether it's through bridge or through the acquisition, you're trying to get to agency debt, because that's the most advantageous for you. That's what I'm assuming. Okay. So I'm assuming that was the case for me. In storage, there is no agency debt, right? And so there isn't this streamlined process of, okay, you need 10% liquidity, and you need 100% loan amount and net worth. There isn't this thing, because each bank is totally different. Credit union's different. There are a number of different lenders out there. And it's like, I kind of think of it as like the wild, wild west. It's just like, there's a bunch and they all offer different things. And so it's no real streamlined way of doing it. So on my very first deal, I'll just give you an example. My very first deal, we, again, I thought it was going to be easy. I talked to a few lenders. I talked to specific lenders in self-storage. So at first I was just trying to find any lender, and I was looking at a lot of the multifamily lenders and saying, hey, you guys do multifamily. Do you guys do storage too? Oh yeah, we do storage. Of course. Yeah. And then I started to talk to them more about it. And then they're like, not really interested. Or what they do is they give you bad terms. And you're like, those terms sound terrible. I don't want to do that deal. So it's kind of like their soft way of just saying, yeah, we'll do storage only at these terrible terms. So you have a lot of lenders who are really not into storage. So you got to find the right lenders that are. Then I found those ones, and I started telling them what I was doing, and they're like, wait a minute, if you're trying to go SBA route and you're trying to syndicate and this and that, it's not working. It's meant for small business owners, not meant for like, you guys. I don't know. It wasn't a good fit, and I was like, oh, so okay, so this SBA thing isn't going to work. So then I was again still trying to find more lenders. I ended up going with a private lender, basically just this investor that we knew, and they financed it for us. So, but it takes a lot of time to go through all those different lenders, find out the terms aren't good, or find out that they do like storage, but they don't like your the way that you guys are going to run it, because again, I'm in California. Ones we're going to buy are in Louisiana. It's like, wait a minute. And then, I was getting advice that I didn't really like. Some of the advice I got was, well, why are you buying a value add property? Why don't you just, like, if this is your first self storage, then why don't you just buy a stabilized property and then just run it for 5 years and then sell it and then get some experience and then buy a value add? And I was like, thank you for that, but that's terrible. That's terrible advice. So I was like, that isn't going to happen. So went through a lot of that. Ended up finding, because I had great relationships in multifamily, and because I had a track record of multifamily, I was able to find a private investor who just wanted to do that deal. And I've since found other private investors as well that have financed us, and so I haven't had to go to a bank. Sometimes I have. Let me just illustrate to you. There are banks that will lend on storage, right? In general, banks, terms wise, is going to be recourse. There's credit unions. It's probably going to be recourse, right? So it's not, no matter what size. It's again negotiable. They're probably going to be 20-year amortization. Sometimes you can stretch them to 25. I would say the lending environment right now is probably a lot more strict, and so chance of you stretching them to 25 is not so good. Let's see, there are debt funds or bridge lenders that you can get, kind of floating rates, that maybe are maybe not the best thing to get into right now. There are life insurance companies that you can, that will lend to you, right? So instead of, well, when I was in multifamily, I didn't really know of many life insurance companies that were doing multifamily, but there's life insurance companies that will do self storage. There are CMBS options, so commercial mortgage-backed security options. So the big Wall Street banks. So we've done. There's seller financing, right? So you can do seller financing, which everybody's looking for. And there's private financing. I don't know. There's probably other ones, but those are the major ones that I know of. We've done all of them except for bridge. So we haven't done bridge or debt fund yet, but we've done banks. Well, we haven't done a bank. We've done credit unions, life insurance, private sellers, CMBS, and seller finance. Okay. And terms. Okay, just real quickly on the terms. Terms are gonna fluctuate here and there, but they're probably in general going to be a little bit higher, especially if you compare them to Fannie Mae, Freddie Mac. Okay, there's no Fannie Mae, Freddie Mac in self storage, but there is SBA. Okay, Small Business Association, which is the government. The actual interest rate is going to be a little bit higher in self storage than it is going to be in multifamily when you compare it to the agency debt. Okay. And just so you know, SBA, the big attraction to it is that the government is kind of lending a portion of your loan, right? They're guaranteeing a portion of your loans, which is why the banks like it. And you can get up to 90% leverage on your acquisition, right? Which is kind of unheard of in multifamily, especially right now. You're going to get 90% leverage, but you can get up to 90% leverage in SBA loan. Takes a little bit longer though, so understand the differences. Okay, hopefully that answers your question there, Greg. If you got any follow up, just let me know. Okay. All right. All right, JD. Hey, JD, how you doing, buddy? Good to see you here. You wanted to know, is it better to build a self storage or to buy existing? Okay, well, this is it's a great question, and I cannot tell you that because I haven't built one. I can't tell you that it's better to build one. It's just development is a different game than buying an existing property, right? If you're going to develop, a lot of people ask me this. There's like, hey, you're in self storage, so do you want this? Are you interested in this piece of land to develop here? Development is different, and you know this, JD. So, you got all this work that you have to do. That's before you could even start building, right? Entitle it, or you're buying it. Plus, you got to think about how did you acquire it? What type of loan did you need to acquire it, or um, did you already just own that piece of land? Um, so the entitlement process can be tough. The permitting process you can have issues with there. But then now you got to build it, and also I will tell you the big thing that people don't think about. I think is your investors, right? If you are like me and you're an existing property buyer, so all of the 16 properties that I bought are existing properties, um, and none of them have been developments. That means all of my investors are used to what an existing property is how they're going to perform, which means they're expecting low amount, lower cash flow the first year, then it grows the second year, it grows the third year, and they're probably going to exit in year five, and they're prepared to hold the money for 5 years, and they're anticipating getting some cash flow along the way, and then a sale at the 5 year period. Well, a development deal has a different type of investor because you have, I would assume, no cash flow the entire time, and then you have no cash flow, and then a sale, and a big sale, and probably like you could make more money than you would if you invested in it's like a 3 year period, right? So in that 3 years, you get no money, and then you get a big sale, and it's a lot of money, more money than you would make probably if you did a existing property deal. Um, but your investors have to be prepared for that. They have to be that type of investor that say, look, I don't need the cash flow. I can just sit for 3 years, and then I'm expecting like a good sale here to happen. People don't think about that sometimes, and those types of investors can be different. It's a lot of education, a lot of kind of training your investors to switch from one to the other. So that is something to think about when you're doing existing and you're trying to convert to development. So in terms of what's better, I don't really have a way of saying, necessarily what's better. It's like what's better, multifamily or self storage. I don't know. It depends on the time, depends on you, depends on a lot of different things. But you have to be prepared for a different type of investment. No cash flow, big sale. Okay, and then versus uh, cash flow, and growing cash flow throughout a longer hold, a 5 year hold, and then a sale, but not as quite of a large as quite of a large sale as I would get in a development deal. So it's all kind of your choice of what's better, and along with your investors. Okay, so sorry, that's kind of like a waffly answer, and not a direct answer, but yeah, I can't really give you one of what's better. Okay, but thanks for participating, JD. If you could got any follow up to that, you want to add any more comments, just go ahead and write that in there. Okay, I got a question from Doctor. Okay, good. Oh, I guess this is almost the exact same question. Is it better to build a new storage or buy an existing? Heard there is more upside in new development. Oh, yeah, yeah. Okay, yeah. JD, I guess it's the same one. Okay, so maybe you logged it. Yeah, you logged it different ways. So is there more upside in development? Yes, there is. There is more upside in new development. And what you're be doing is you're selling in 3 years, right? And you should be able to sell. Say in most self-storage deals, you're probably trying to double your equity in 5 years with cash flow and distributions. Double your equity in 5 years, 2x multiple. Well, if you just double your multiple double your equity in 3 years, which you hopefully can do in a development deal, well, then it's a better return, right? So yeah, hopefully that in terms of returns, it can be better. It can be better. I would just say, I know that you're in the middle of it, but it just be careful, as of right now. I know that a lot of people that I've talked to that are developers and that have developed deals in self storage specifically, they're talking right now that um, with the interest rates and the banks lending, it's all like it may not pencil out like it would have 2 years ago. So make sure it is penciling out. That's what you got to be careful of. Is like the returns. Like if that property was supposed to sell at $20 million when you're done. And if you look at the market right now and the market's starting to creep down and properties that were selling at $15 million, $20 million are now creeping down to 19, 18, 18. It's lowering your returns. So the chance of you selling for 20 is not so good anymore. So the faster you can get it done and sell it sooner rather than letting that creep down, 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 and then you hold on to it and you're just like you're holding on to it and paying out a lot in your loan, um, could just be a sort of a dangerous situation to be in for a developer. I mean, obviously that's part of the game, is that you got to be able to develop that, get it out quick, make that sale happen soon. Okay. All right. Let me see. I think I got to most of my questions. The other questions, I think I'm just going to save them probably for next week because we had a lot of great questions today. So thank you for those that have joined me. I'll put my contact information again here on there. Those of you who are interested in self storage and investing in, say, one of our deals, we do have a great deal that we're going on right now. We're at the very tail end of our capital raise, so we don't have many slots left. We just have like just a few $100,000 really. It is a 506c. It is for accredited investors only. But if you're interested in investing in a deal that we're doing right now, reach out to me. Send me a direct message on Instagram. You can see my Instagram there, or just send an email to invest@radiantstorage.com. And I'm happy to talk with you about this particular deal. If you're not an accredited investor and you're just like, hey, pal, not really prepared to invest in this particular deal right now, but I would like to uh, be on your list and be available to invest in a future deal, then still reach out to me. Let me know, because we do have to have some type of relationship. We need to establish a relationship before I can show you any of those type of deals that we have in the future that are for really like friends and family. Okay. Happy to do so. Happy to get have a conversation with you, but definitely reach out to me through one of these ways, and we'll set up a call and talk from there. Yep. So at this point, love for you guys who are still here to give me a thumbs up, and offer any suggestions too. I mean, my wife gives me a lot of suggestions. I'm like, you guys, you got to do this. You got to do this. You got to do this better. That's because her Instagram following has like 65,000 people, and mine has 1,000. So that's kind of what it is. But that's it for tonight. Thank you for those of you who are joining me. I already told you about the best way to reach out to me, and reach out to me with any questions for next week. Happy to answer those questions as well. Okay. Take care, everybody. Thank you.